Amazon shares rose in extended trading after the company reported better than expected revenue and earnings. Advertising revenue grew 24% in the first quarter, outpacing retail and cloud computing. Amazon Web Services also reported results that topped estimates. Amazon reported better than expected earnings and revenue for the first quarter, driven by growth in advertising and cloud computing. The stock ticked higher in extended trading. Here's how the company did. Earnings per share 98 cents vs 83 cents expected by LE. Revenue $143.3 billion vs $142.5 billion expected by LE. Wall Street is also looking at these key numbers. Amazon Web Services $25 billion vs $24.5 billion in revenue, according to StreetAccount. Advertising $11.8 billion vs $11.7 billion in revenue, according to StreetAccount. Operating income soared more than 200% in the period to $15.3 billion, far outpacing revenue growth. The latest sign that the company's cost-cutting measures and focus on efficiency is bolstering its bottom line. AWS accounted for 62% of total operating profit. Net income also more than tripled to $10.4 billion, or 98 cents a share, from $3.17 billion, or 31 cents a share, a year ago. Sales increased 13% from $127.4 billion a year earlier. Amazon expects a continued jump in profitability for the second quarter, but at a more measured pace. The company said operating income will be $10 billion to $14 billion, up from $7.7 billion a year earlier. Revenue in the current quarter is expected to be in the $144 billion to $149 billion range, Amazon said, representing growth of 7% to 11%. Analysts were expecting growth of 12% to $150.1 billion. According to LE, sales at AWS accelerated 17% in the first quarter to $25 billion, topping Wall Street's forecast for sales growth of 12% to $24.5 billion. For the past year, growth in AWS has slowed as businesses trim their cloud spend. But Amazon executives have said they're seeing cost optimizations taper off. And they've indicated that demand for generative artificial intelligence can be a boon for its cloud business. Amazon's earnings growth has been driven in part by widespread cost-cutting, tweaks to its fulfillment operations, and the stabilizing of cloud spending. CEO Andy Jassy has become more disciplined in the company's spending, while growing profitable services like advertising.